And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, everyone. I'm surprised to see so many of you here. Today is Monday, January the 17th, the day we honor the great Dr. Martin Luther King. There's no economic releases. Markets are abbreviated today. So we've got just a relatively quiet day and just going to be monitoring markets for the most part. We're not going to see the longer time frame participation in these markets. We're probably going to see some smaller ranges unless something wacky happens. And we're going to probably see a little bit less liquidity also should something happen. So as always, it's all about the context, risk management, and patience. And I think we're going to have to exercise a lot of patience today. We've got, just to kind of look over what's going on for the rest of the week as far as economic numbers are considered. It's a pretty quiet week. Tomorrow, Empire State Manufacturing Index at 7:30 Central, Housing Market Index at 9 o'clock, neither of them expected to be hugely impactful. Wednesday, housing starts and permits at 7:30, maybe a little bit impactful. And then on Thursday, typically we have our jobless claims, and then we have Philly Fed manufacturing, both of those at 7:30 Central Time. Existing home sales at 9 o'clock. We have the EIA natural gas report at 9:30 on Thursday, and at 10 o'clock Central, the EIA natural gas or the EIA petroleum status report. If I can get those things out, we'll be in good shape. Friday, leading indicators. So really not a lot of economic information coming out this week. Short week. Remember, short hours today. If your markets are even open, they're going to be closing by noon. Make sure you are flat. So with the light economic releases this week, with Martin Luther King Day today, and we got stocks opening steady to higher on the holiday schedule, and again, no economic releases, lower participation, lower liquidity. This week's investors are likely to be focusing on earnings, including almost the rest of the major banks due out this week, and we got the first of the FANG stocks due out on Thursday in Netflix. You have our tech stocks kind of hoping for strong earnings to offset a rather tough start for some of those tech stocks so far this year. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel. You get notifications when we do go live. VIX down 5% this morning at 1919. Dollar index 95.33, and the 10-year yield, which is the federal offices are all closed. It's basically where it's settled, 1.79% on Friday. A little bit of a boost in that rate on Friday. Good morning, Brian, first in the room this morning. Charles, good morning. George, Phil, good to see you. Tanya, always a pleasure to see you. Things are going well for you, as for all of you. George, David, Manuel Cesar, good morning from Germany. Guten Tag, Manuel Caesar, Island Sim Racing. Hello, yep, we are in the house. Sarah Hall, good morning. I love the pictures that you put up there. Sarah always makes me feel like I'm looking at a sunrise. Good morning, Vince. Christo, afternoon from South Africa. South Africa, good afternoon. Good morning, Mason. It's good to see you. Expediter Dean, there's a new name that I don't think I've seen before. Welcome to the Market Forecast. Rob T, Dead Letter Opener, Ryan Williamson, Nico, and Toad Man Extra. It's good to see everybody. Not expecting much today. Holiday, abbreviated hours. We're going to go ahead and take a look at these markets. It's probably not going to take very long this morning. We do have group coaching today as well as foundations. Group coaching is going to be a little bit late as usual, and we've been doing foundations from 12:30 to 1:30, 1:30 to 2:30, something like that. We'll have the group coaching. And then, of course, we've got the rest of the week with foundations and as well as Wednesday's group coaching. Foundations this week, we're talking about some of the trading choices, some of the trading decisions we all have to make as traders as we get into trading and as we assess what we are doing as time goes on. Tomorrow, we're going to be talking about trades that are beneficial for futures trading, and Wednesday, trades that are going to be detrimental for your endeavors in futures trading. And then, of course, Thursday we'll be talking about trading psychology, and that's going to round up week 2 of Top Steps Trading Foundation. So we'll be looking forward to seeing you all there, and hopefully you'll find some good information and some things for you to use moving forward. We've got Equanimous. I'm not sure how to say that, but I'm just going to say, hey, good morning, KM. Main Point Big Ideas. Good morning, Hannah. Jerry is awake. Hope I am too. Nico, Jeff, good day, and Daniel. All right, so we gotta get things a little bit set up here for us. We'll start with the S&Ps, and then we'll watch the open in crude oil. But again, a lot of these markets are opening in range and in value. Not a lot of important, a lot of reason to get that involved in some of these markets. The couple of them are opening a little bit out of balance, but again, without the major players that we look for our real direction in these markets, we're likely to see some pretty short time frame control and some pretty small ranges. Perhaps with a lower liquidity, something happens, those ranges can expand exponentially, if you will. So let's take a quick look here into our charts, to starting again with the S&P. All right. So the S&Ps seem to be holding on to upside structure relatively well, and the fact that it's putting in higher lows and still putting in higher highs. My question is always, how good of a job is the market doing in that direction? We've got open interest on Friday off of a look below weekly kickoff low with some pretty substantial rejection of that level, but no open interest. We added 100 in open interest. So it's not like there was a big, wave of new buyers coming in, bouncing it off that. We ran out of sellers as much as we brought in new buyers. Volume was pretty good on that reversal, but it's just, it doesn't give me any information when there's no real change in open interest. It's not like we can say, oh, that was short covering or that was new buying coming in, because there's no change in open interest. It makes it, again, very difficult to read. So we're going to start the week relatively centrally located between last week's high and low, weekly kickoff high and low. Take a look at the 30. So settlement is 46.54.75. Put that on your charts. We don't really have much as far as overnight inventory with which to speak of. I mean, we kind of opened here. We're trading here. Not a whole big change in price, and it looks like we're headed back towards settlement and perhaps even closing any chances of a gap open that we might have. Now, there is one thing that is interesting, and I think we'll probably see this better on the TPO chart. This all happened after the regular trading hour close, so it probably didn't have much volume to it. But however, it did create a late spike. Now, are we going to open above the late spike, or are we going to open inside the late spike? And where does the late spike begin and where does it end? Here's the M low. Okay, this is the 2:30 to 3 o'clock bar, which usually holds where settlement is. So what we have settlement here, 54. So here's M. It closed an M, but N and O period, the 3 to 3:30 and 3:30 to 4 o'clock bar, continued to push higher after the close. So does this create kind of a late spike for us? And if it does it create the opportunity for us to see if we accept higher pricing in the late spike, or do we not? Take a look at the 30-minute chart. Okay, so I'm really kind of basing the late spike off of just this spot right here, 46, let's call it 49. 46.49 would be the base of the late spike. It looks like we're opening above it. But really with no overnight inventory and no major players. So I really don't think that that this late spike really means all that much, because we're not going to have everybody here to respond to that fact that it may be opening in a late spike-ish situation. Is it a late spike? Isn't it? Is it too late? Was there not enough volume to create the interest? All of these things will come to pass as we watch the markets turn, as the market turns. So I'm really not putting too much serious into anything that I'm seeing, because again, we're not going to have our participants. We're not going to have our longer time frame people here that would care about this. I mean, a lot of folks are just taking the day off, and I applaud all of you for your diligence in being here and watching and learning, even though there may not be that much opportunity for us. Another question here we've got, is there a late spike in crude as well? We're going to take a look at that. Looks like there very well might be. Technical upside structure remains, obviously. Doesn't take a market genius to know that we are in a pretty good uptrend here, and it seems that the market is continuing to build volume and open interest. Now, this is the March contract. Today is switch day. We're still in rollover, but we've still been managing to continue upside continuation instead of falling into a range. So we've got the March contract. We've got our important inflection levels. We're looking at 84.80 as weekly kickoff high, considerably lower, 77.80 as weekly kickoff low. We've got a lot of space down below before I think we actually change this market state to anything but upside. So we've seen Um, uh, and could quite possibly due to rollover, we've seen basically higher open interest in crude oil every day this year. Every day this year. There's no change in that. From Friday, we added another 35,000 contracts. Now, again, this can be somewhat related to rollover as people, kind of leg their spreads forward. They may put the leg on the other side and take the leg off on the other side. Some of this is likely to be that, but I'm still impressed. And if I think the market's going higher, I want to see that continuation of higher volume. And now this is blurry as well because this is the March contract, and as the volume increases in March, it's going to decrease in the Fed contract. So we can't really depend on this. I'm really depending more on open interest and the fact that we've seen an open interest increase every day this year in crude oil as this market continues to move up. It leads me to believe that this auction process to the upside remains healthy. You're gonna have to see as this rollover kind of finishes out if this continues, but it's got me on the idea that I want to look to buy weakness until something changes and something is proven wrong. Here's the 30-minute chart. We're already past our 1 minute here. All right, so pretty decent up move on Friday with that additional open interest. Again, might be somewhat rollover related, but that's a lot of open interest. We've got no overnight inventory to really speak of, maybe a little bit short, because you got to remember we started the session right here. We've been kind of sliding to the downside, but it's taking us right back into our range from the previous, from Friday. Is there a late spike? If there was, it didn't close up there, which is a degree of rejection of it. Now we're looks like we've opened below it. Now that's rejection. Take a look at this profile. We've got an area of balance. We've got an area of imbalance. We've got an area of balance. We're opening in the area of imbalance, which has a tendency to have the market trade from point of control from the upper distribution to a point of control in the lower distribution to try and repair some of what was left unfinished in this area on Friday. The fact that today is a short day, it's a holiday, I would say that probably improves the probability that we're going to trade from high volume node to high volume node at some point and then call it a day. So if we've missed our opportunity up here, we may just be better off sitting on our hands, seeing how late it gets before we have an opportunity at this high volume node down here. It's kind of just value low before we really look for an opportunity. Looking at this 30-minute bar here, it's this opening range here might be something that would be interesting for us. This is operating correctly. Yes, it is. So, of course, it's going to be a huge opening range, 16-tick opening range. But if this opening range remains the high, then a move down to that lower point of control or high volume node down here would be, of course, much more probable. Now, we're looking at about a 50-tick winner if we were to take it right here. Is it worth the risk we're taking to the high of the opening range? Would not be necessarily a bad idea. All right. Nasdaq now. China cut rates, huh? What are they trying to do? So the Nasdaq chart paints a little bit of a different story. While the S&P continues to put up higher highs and higher lows, the Nasdaq has started to put in lower lows and lower highs. The medium time frame structure here is showing weakness. Lower lows, lower highs. We added 6,500 in open interest off this low down here, which was below weekly kickoff low. If you remember, weekly kickoff low last week in the Nasdaq was 15,492, 15,492, right about here, and we really just kind of kept all the candle bodies above it. We had a couple of excursions down below that showed rejection down there last week. So volume was pretty good on Friday. We looked below and came back above an important inflection level. That's good news for us. And we had an increase in open interest. So it looks like we've attracted some buyers lately here in the Nasdaq. So maybe we'll start to see some protection of these lower levels. Take a look at the 30-minute chart. All right. What do we have? We have no overnight inventory. There's potential for a little late spike here, but I'm not really going to be depending on that today because, again, we don't have all our participants. So it looks like we may open with a gap, maybe not. But I don't think that's all that impressive either because, again, we're the only folks that are looking at this week or today. So I'm really going to be somebody's really going to have to speak to me and say, hey, bonehead, this is your spot. This is your opportunity right here. If not, I'm probably not going to be doing much. It's going to make it easier for me for the rest of the day because we do have foundation and group coaching. Let's take a look here. Gold. Volume and open interest indicate sellers above 1824, which was last week's weekly kickoff high. Well, this week's is 1828. So we didn't really move it much. We just pushed into some more of those sellers that appear to be holding on up at that level. Medium time frame upside structure doesn't seem to be doing all that well. We've got low here, high here, but we're not seeing momentum and continuing in that direction. We did add 7,900 estimated in open interest on this test of above last week's weekly kickoff high, which was rejected, which would indicate we brought in some sellers here, which may not be a bad thing when the market does break out to the upside. It could bring some energy to the upside if that is the case. So take a look at the 30-minute chart here. Range bound for the last 3 sessions. Settlement, 1816.50. Where are we? We're right in the middle of value. Do we have some overnight longs? Have they kind of unraveled a little bit? I don't really know, don't really care. Again, this is a market that is kind of in balance, in range, in value. Though I don't see that there's great opportunity here today because of the situation of the holiday and the abbreviated markets. I'm going with no runs, no hits, no errors, nobody left here. And when I do say that, the market will usually make a liar out of me. Not thinking that's going to be the case today. We're very centrally located. We're very comfortable in range here, and I don't see that the participants that are available to us today are going to have enough muscle to move us away from this area very much. So again, another situation where I'm going to monitor, and I'm going to make sure that if I take a trade, it's going to be one that's yelling to me, do this. I'm not going to go looking for trades, in other words. I think that's important on days like today is keep an eye on things, Watch what happens if the market comes to a situation or something changes to the fact where you're like, oh my God, this looks good. I have to make sure it makes me nervous, because if I'm too confident in a trade, usually it's going to be wrong. But if the market puts me in a situation where I can limit the risk and the reward is great, it's going to come to me. I'm not going to go looking for it. Here's the 30-minute chart. Didn't we do that already? Yeah, we did. Here's the euro. Okay. So last week we had a breakout of this kind of mess of a balance that we've had, and the breakout has kind of faced some long liquidation. Friday we lost 4,200 in open interest. Now we had a move to the upside. The longs, it just looks like the longs got a little bit nervous and brought us back to, in essence, right now, the high edge of this area of balance here. We've got weekly kickoff low just below that, which is 113.71. And this would be a really important inflection level for support if we even get the opportunity. Volume and open interest dropped volume as well. So, the contrary move lost volume. There's still plenty of space above, but I'm just kind of wondering where the buyers are. And of course, we're going to have to be watching the dollar, which probably isn't going to be doing much today, seeing that the Fed is closed. 30. So we had some overnight shorts, some overnight longs, some overnight shorts, already starting to reconcile. No gaps, no real important reason to get in. We're in value. Looks like we're headed perhaps back towards settlement. Again, one of those markets where today, because of the holiday, I'm going to monitor, and if something comes to me, I'm going to consider the reward over risk. Looks like we maybe got stopped out on our opening range trade. Let's take a look. Yep, looks like it. So when the opening range opens and it's too wide, this would be 16 ticks. I know I've got to go 3 or 4 ticks outside of it. It's a 20 tick change. On a day like today, I'm probably not going to be taking this trade. But if I decided to, sometimes the market will come back into the opening range, offer you a cheaper opportunity, and those are sometimes the things that I would like. But again, today, what are we looking at here? We're not looking at any longer time frame traders. We're looking at short time frame pea shooters like me picking each other's pockets. So stay patient. And I think we finished with the euro, didn't we? Yes. 10-year. Okay, our recent breakout to the downside has brought more interest on Friday, adding 34,000, which isn't huge for the 10-year, but it tell us that the downside auction might still be in good health here. Today, we're continuing that move to the downside. We say we've got plenty of space down there. Take a look at the 30. So here's the one we've got a gap in. Settlements all the way up here, 128 and 6/32. We got a lot of shorts in this market. Are there longer time frame traders that are going to continue to sell into this, or are we going to get our short time frame traders short and get them nervous and have them bring a pull back up? Again, we've got a gap rules. If we can't close the gap relatively early, we look for trades in the direction of the gap. But again, we're only playing with a part of the participants. Stay patient. Typical Monday. All right, let's take a look at the nat gas and we'll get down to business. All right, here's the daily. So last week was a fun week, man. We broke out above. We had a huge move to the upside, a huge move back to the downside. Where are we now? Well, we added 7,600 in open interest against this weekly kickoff high from last week that ended up being supportive as the market came back to it. Now it's weekly kickoff low. That is $44.80. Yes, $4.80. Now it seems to be kind of seeking some sort of balance or direction, but it's got previous balance here, previous balance here. It's traded to that one and trying to get back to that one, and not really looking for much again today because of the holiday. I don't have to say that anymore, but we got a pretty big boost off this low on Friday. We're seeing some potential continuation. We did open with a weekend gap again. This market just seems to do that. Here's the weekend gap. The weekend gap is closed. We don't really have any overnight inventory at this point. If we do, it's short. No gap. Looks like we are leaving value from Friday. That could be something that would be interesting. Because again, I think we're still a little short in short time frame. And our short time frame traders are direct competitors. The speculators are really the only ones that are available and operating today in these markets. So again, we're going to try and stay very patient, stay cool, calm, and collected. There's plenty of us to check out later with foundation and group coaching, and that's probably going to be it for me for the day. So we will call this a forecast. I'm again impressed that all of you are here and looking at the markets, even though you could have easily said, I'm just going to stay in bed or do something else today. The markets are basically closed. We don't have to do anything. And the opportunities may present themselves. I am not gonna feel hurt if I get left out of the markets today. If I don't see anything, I don't see anything. Make sure you try and stay cool, calm, and collected today. Rusty hours on futures today. Certain ones end at different hours. Some of them don't even open. Grains and meats don't even open. Equities, currencies, I think all close at noon. I think gold closes at 1:30 today, but I am not going to be doing anything after noon for any of my markets that are open. Just make sure you know. You can check that on the CME website when your market's going to close. Go to the website, search holiday hours, and then you can find Martin Luther King Day on there. But again, nothing is probably going to be worthwhile after noon, if even then. Okay? All right. Take a deep breath. Stay humble, grateful, creative, and extremely patient today. Look forward to seeing you at Foundation and or group coaching, and back again tomorrow morning for the market forecast. Do not think that there will be a market recap today. I do not think so. I've been wrong. I've been wrong before. So anyways, have a great trading day. Trade well. I'll see you in the proverbial trading pit in about 10 minutes here. And we can stand around and tell jokes. Have a great day. Trade well.